Alrighty, third stock up here of this bunch is Meta. So Meta, we're up about 145% on this one, up $325,000. And this is the biggest position in the portfolio, even bigger than good old Tesla. So this is $548,000 position versus $419,000 position for Tesla. Now, in regards to Meta, okay, is Meta stock a buy? Okay, yes, absolutely, Meta stock's a buy. Here's what's going on with Meta stock. Now, am I personally going to be buying it? Probably not, because it is already such a large position. I'm already so overweight Meta. That's a problem with me in Meta and Tesla, to be honest. I'm overweight these stocks heavily right now. 31% of my portfolio is in Meta, 24% is in Tesla. Now, do keep in mind, it's not like I put 31% of my portfolio in Meta and 24% Tesla. The stocks have gone up so damn much that they became such heavy weights in the portfolio, right? I'm up $380,000. Like, my cost base is like $23,000 or $39,000. I mean, excuse me, is like $39,000 in regards to Tesla, right? So yeah, cost base is $39,000 and we're up $380,000. And when it comes to Meta, cost base is a little over $200 and we're up over $300 on the stock. That's how those became such large positions. So I can't really add Meta, but the stock is still a buy, actually, and I understand it's had a great year. It's irrelevant. Whatever's happened in the past year for the stock price is irrelevant. The bottom line is with Meta, it's trading at 22 times this year's expected numbers, right, 2023. And we're talking about one of the best balance sheet companies in the world. We're talking about Zuckerberg that's got the team very focused. They're going to run lean and mean for the next several years. And we're talking about when you own FB Messenger, IG, and WhatsApp, you got a very bright future in front of yourself, right? Plus the metaverse opportunity. I'm really excited about, Oculus 3 and, MetaQuest 3, whatever we want to call it, and whatever that produces for numbers. I'm looking forward to getting my hands on that and trying out that product. I think it has huge potential. So when it comes to Meta, the stock is still a buy. I won't be buying it. Hard decision, but it's 31% of my portfolio. So I've got to watch, because at the end of the day, you never know what could happen, right? And you've got to watch your risk levels when a position's already too big in your portfolio overall. So yeah, Meta, love that one. All right, next one up here, the fourth stock of the portfolio. Will I be buying or selling it? It is Palantir. So Palantir, one of the most controversial stocks in the stock market nonetheless. Yeah, definitely one of the most controversial stocks. People have strong opinions on Palantir. Bullish, bearish. It seems like, man, I don't know. It's just Palantir is one of those stocks that gets the people going. And in regards to Palantir, it's certainly doing us very well so far. We're up 73% on this one, up about $36,000. It makes up about 5% of the portfolio in general, right? Now, you know what's interesting about Palantir is we're dealing with a company that has obviously a great relationship with government, right? We're dealing with a company that has massive expansion into commercial. We're dealing with a company that has huge potential in the AI space. I've talked about Palantir for the last several years in terms of being the perfect company that's at the cross sections of data and artificial intelligence, right? And helping your company, government, whatever, make much better decisions than if you didn't have Palantir. And whatever you spend on Palantir, it's going to yield you much more than that. So if you spend $25 million a year on Palantir, it should yield you way more than $25 million in cost savings or helping generate better business decisions for more revenue opportunities, whatever it is, okay? So when it comes to Palantir, it's such a controversial stock because some would say it's very overvalued, some say it's, very undervalued, okay? And you're talking about a company that's trading at about 66 times this year's 2023 numbers, right? Which looks expensive. And then you add on top of it the fact that the stock price has gone up over 100% this year, and people say, oh, Palantir is overvalued. What I'm here to tell you today is Palantir is not overvalued, actually. We're talking about a company that's just hitting profitability. They're at infant stage. This is inning one of profitability for Palantir. The profitability this company should produce 3 years out, 5 years out, 7 years out is going to make today's numbers look like a complete joke. Like, oh, that was so cute when we were at infant stage of profitability, right? The company's just learning how to walk when it comes to profitability, okay? We still got to run and sprint ahead. And so when it comes to Palantir, it looks expensive when you first view it, and then you start to dig in a little deeper and you start to run some projections on what net income can be several years out, and you realize it's not nearly as expensive as it might seem. And then you add on top of that one of the best balance sheets, certainly, in all of the world, right? And then the AI opportunities there. So yeah, Palantir. Now, am I going to be buying Palantir stock? And the answer to that is potentially. Potentially. It's not like a for sure buy for me because I already have a pretty good position size in it. 85K is pretty appropriate. I mean, I can see myself maybe getting up to $100,000 in this portfolio. Am I planning on selling Palantir? Absolutely not. I mean, when you got a company in this space that has the opportunity this company has over the next, 5+ years, if not 10+ years, yeah, I'm not interested in selling this one anytime soon. So Palantir is just a long-term hold for me. All right, next stock up here. What is it? Is it amazing? Is it an amazing stock? Let's see if it's an amazing stock or not. No, it's not amazing stock yet. We might get to an amazing stock in a minute. Skyworks Solutions. We're up about 31% on the stock, up about $16,000. Now, do keep in mind, this doesn't account for any dividends received from any of these stocks, which obviously Skyworks is a dividend payer. So we've made much more than that over the years of holding the stock, right? But when it comes to Skyworks, they're in a bad place short term. There's no doubt about it, okay? There's a reason the stock hasn't moved in a year, basically. Now, the company trades relatively cheap. It trades at about 11 times this year's numbers. It does have a dividend yield of nearly 3%. But the problem with Skyworks is they get about, it's usually anywhere between 40 and 50% of their revenue from Apple. Here's the deal with Apple. iPhone revenues have been going down. Volumes have been going down. I wouldn't be surprised at all if iPhone volume's down again in 2024. So for Skyworks, it's, volume's everything for them, right? They only have so much content they can sell into an iPhone. Maybe it's $20, $25, $30 worth of content. So at the end of the day, it's all about volume. That's how they push up their numbers, right? Now, Skyworks has many other customers, keep in mind, outside of Apple, but Apple's such a significant customer for them. So if iPhone volumes aren't very exciting over this next, let's just say 12 months, it's going to be a holdback for Skyworks overall, okay? So this is something to kind of keep in mind here. Also, there's a few competitors in regards to Skyworks, but the problem is these companies usually work so close together, it's hard to just rip and replace for a company like Skyworks. Same thing with Cirrus Logic, ticker symbol Cruise. It's a stock I owned in the past, done me tremendous. That's another semiconductor company that's really in the audio space. When it comes to Apple, these companies usually work close together. So they're seen as like, oh, you can just rip these out, throw another chip supplier in there. It doesn't really work like that, especially when you got to understand, Apple's working on iPhones 2 and 3 years before they ever come out. This iPhone that's about to be shown off and come out, this iPhone's been in the works for quite a while now at this point in time, okay? At least a couple years. And so that's something to kind of take into account in regards to Apple, Skyworks, and all these different companies in general. So balance sheet's phenomenal at this company, phenomenal management team. It's just not the most exciting stock in the short term. Now, with that being said, would I be a buyer of Skyworks Solutions? And the answer to that is probably, especially if the stock goes any lower. Let's say Apple gets hit hard over this next 6 months or whatever, right? A lot of people are like, oh, iPhone 15 is not going to move volumes, revenue is going to be down next year, profitability is going to be down for Apple, blah, blah, blah. Okay, let's say Skyworks goes to the 80s. I'll likely be picking up shares of Skyworks, especially if for any reason this position went negative into the red. Definitely a pickup for me. There's always a potential that Apple could want to replace Skyworks with their own chips and try to do their own thing. But you got to understand there's so many patents that go into that. They could end up in a legal mess. Many times it doesn't make sense for Apple to do something like that. So Skyworks Solutions, great company, not in a great spot short term. Okay, and I might be buying it if the stock was to go down a bunch in the short term.